Hello traders out there in Traderland, this is Dez here from sunny Viva Las Vegas. It is Monday, June 25th, 2012, and we had new home sales for May coming in at 7.6. A nice record. However, the markets go bearish. We have the Dow down 138 points off of a bigger low around 170 today. Off by 1%. The S&P off by 1.6%. The Nasdaq off by almost 2%. Russell's down by 1.7%. And a 2% drop in the banks, which is really big, leading the indices down. And we have gold bouncing back at 0.7% and silver at 2.14%. in the green. US dollar up 0.31, putting pressure here on the markets as a whole, and crude oil down 1%, bucking the trend that we're seeing in other commodities. Transportation down 1.92%, really showing weakness here in the Dow 30. A major spike here in the VIX volatility index, up more than 12%. We are over the 20 mark, and for all you grads out there, we are at 2.48 here on the trend. So you'll notice that I have different lines here. It's because I am here in Las Vegas doing a mentorship. Matter of fact, say hello, everybody. Hello. So we are here having a wonderful time. Wish you were here. But check this out. We're looking at the S&P. And this S&P, we have a lower swing high, another lower swing high, but then we make a higher swing high. You'll notice that I have a trend line going higher here. So it looks like we're starting an uptrend. I bring up another trend line here. Swing low. This may be a support area. We don't know yet. So this is a phantom line. All I did was make this upper trend line, duplicated it, copied it, brought it down here to this swing low that has been solidified, giving us a probable area. The problem with today's move is that we close below the 20 simple day moving average, and we are making a decisive move to the downside. If you look over here on the MACD, which is our centered oscillator, that we have a drop taking place now on the MACD line above or below zero. That is problematic for what we're seeing here. Now, this looks like an uptrend, but let's go a little deeper. What type of formation might we have here? If we do stop and go higher, this could end up being an inverted head and shoulders, but because of how high this neckline is, I would think that if we come down here and may bounce or just come down here and challenge this area, watch what I'm going to do here with bringing a Fibonacci in from this extended high down to this extended low. If you notice here, we stop right at a very important spot of 0.618, or in other words, 61.8% Fibonacci retracement. That is a key area, and we talked about that area being dangerous. And sure enough, since that time, we've seen a big drop-off since this point. So with that being said, we have a big drop, and now we go into this, what looks to be an uptrend, but it's kind of a faux uptrend because it stops at a key level, making what's called a bear flag. If this bear flag breaks down, you're talking about a sizable drop here, and you could see that print dropping quite a bit on the MACD, reflecting what's happening here in the price action. Now, I'm not saying we're doom and gloom, but what I'm saying is we need to be really careful because such a significant sell-off here, take about 80% of that run, and wherever it breaks down, if it does, you could almost bank on that happening. Furthermore, if I go over here to the weekly chart, we have this drop and a pop, but you'll notice we have a lower high, lower low already starting off the week. So we had this pop, that was that 61.8% Fibonacci that we've been looking at. So that is nothing more than a bear pullback. That is it. With that bear pullback, we have a little support coming in here, and you could almost take this line now, bring it down to that low, and I could see big support here, but if we broke that, it'd be a continuation of this downtrend here taking place. So with that said, I'm going to sign off. We're going to get back to our training. It's a 3-hour difference from where we're at on the East Coast to where we're at here, Pacific time. So take care and very safe trading to you.